All right, good morning, everybody. Happy Wednesday. So it's December 7th, about 9 a.m. my time. All right, so today's analysis is going to be a little bit different. What I wanted to do was simply give you guys, an understanding of the market from the perspective of just, basic indicators and how you can utilize, key things, regarding how to look at the market with sort of, momentum as well as, different regimes, right? So first things first, what I want to map out is from March 2020 right here up until April 2021 or November 2021, that was one regime of the market, right? So this was a clear uptrend. You can say that the uptrend ended here or the uptrend, ended here. And then from this point to this point, things became uncertain, okay? From that point onward, this is now a different regime, which is a downtrend, okay? Now, the reason I mentioned that is because it's important to understand a market in a larger time frame context, because it helps you understand momentum, right? And then you can start dialing in and getting a little bit more granular. So we know that the downtrend is still intact, okay? Forget the levels, forget, what you think is going to happen to the market tomorrow, next month, next week. Now we get into the granularities of the market, which is, okay, so as we look at the levels here, right, here's what we can now start defining. All right, so let me see here. Okay. Where did my levels go? Okay. Let's go to this chart right here. Okay. So what we have here is, a market that is clearly showing us, let's go to the daily, right? Clearly showing us that, we broke below this June low. Okay. We broke below that June low and we smashed below it. Now we're just ranging right here. And so there's no defined way that, oh, well, we broke the June low and now, we're ready to set lower. It's just the fact that we smashed right through it. And after that, there hasn't been big sort of materializing of negative news to push the market lower. It doesn't mean that we're just going to skyrocket higher because there's no bad news. It just means that, okay, maybe it requires a little bit more push, to the downside for us to head lower, okay? Now, on a weekly basis, I want to show you guys that same sort of context of breaking key levels from the perspective of back here. Okay, so what happened was, all right, so let's do this. So what happened was when we broke this January, May, June, July support right here to the downside, you can kind of see we came back and we tested that on a weekly basis, and then we sold off aggressively. And then we created another sideways range right here, had, this pretty critical level around $19,000, which also happens to be sort of the closing candles back in 2017. And then we smashed through that because of the whole FTX contagion stuff that happened. So now the question is, well, are we going to do something like this where we retest a key support level like these right here and then sell off? So that would mean that maybe for BTC, we go all the way up to 19K and then do we sell off? Or is it not necessary this time? And, from here, right, this could just drop straight down like this, just because, you may think that the market is really weak or whatever your justification is. But the point that I'm trying to make here is that a structural support level was broken. And until that point, it's hard to talk about new bullish trends until this level right here is strongly reclaimed. Up until that point, it's just a ranging, choppy environment that you need to pay attention to. And I've talked about this before, in the advantage side, which is that this is the range that you need to trade. If it pops up higher, right, say prices go to like 18,000 or 18.5 or something tomorrow, okay? Well, even at that point, you still want to be a seller or closing, in terms of your long positions, because the market is still very uncertain of what it could do from here in terms of collapsing back down inside range. And then once again, being, largely range bound in this area. That's one large range that you need to be watching. So I believe right now the market is in a very strong, choppy range bound area, which is this yellow block. Anything above, anything below, in my opinion, is just slight deviations from the range. And you should, take that in context of taking day trades or scalps. Again, that's not investment advice, but that's exactly how I'm trading it. Okay. You guys know in the high risk scalp channel, I've been taking trades here and there, like very small, quick in and out trades where we get in, get out, take $100 here, 200 there. Sometimes we, knock out a $500 trade or $1,000 trade, but it's usually like, maybe once a day, once every few days, because the thing is the market is not, in my opinion, ready for a bigger move, like a volatile move to the upside or the downside. I personally think it's just going to chop everybody to death. And in that chop, you have to just recognize when to be in the market and when to be out of the market. And if you could recognize that, and you could take, these high risk scalp trades that I mentioned for Advantage members, paid members, right? You'll know that there's not really a whole lot to do in today's trading terms, right? Because there is no momentum in the market. There's no directionality in the market. It's just a whole lot of garbage chop. And if you keep involving yourself in the chop, you will get chopped to death. Okay. So now we go back to, okay, where are we right now with say, usage of indicators, SR levels, etc. Well, we broke this ascending uptrend, right, to the downside. We're doing our best to maybe claw back above that SR level. Okay. And now, if we throw on more indicators that we utilize, so I use this indicator, it's called qualified VWAP. It gives you daily, weekly, monthly, quarterly, and yearly VWAPs. I like to throw that on. And then I like to throw on what Spaceman built out in terms of key levels. Okay, so all these are free indicators. You can go check it out. So context, of price in relation to levels. We are currently below daily VWAP, monthly VWAP, weekly VWAP, daily open, weekly open, and monthly open. When the price is showing you that it is significantly below these levels, right? It means that the momentum, in terms of upside is a little bit more limited. It doesn't mean that it can't change and then we can't do something like this. It just means that right now, in this particular area, if you're thinking about going long, well, the momentum is not on your side and the levels are not on your side, right? Here's another way to gauge momentum. So, you might be saying, oh, well, Amal, you're showing me that these are levels and, there's like pivots and all kinds of indicators that you could use, but how do I know like momentum is shifting? Okay, well, let me show you a little trick. I like to utilize like the 20 EMA. So let me just change this to 20. So I like to utilize 20 and 40 EMA to give you momentum shifts in the market. So typically on a big enough asset like BTC, Ethereum, Atom, Matic, Solana, like these are bigger multi-billion-dollar cap assets, right? They don't really switch momentum all that fast, meaning the moving averages don't really get thrown off all that much that easily, especially on like a, hourly or 4-hour basis. Okay. So what we have right now is, you could see 15-minute momentum, right? When the 20 and the 40 have flipped bearishly, when the green is above the yellow, meaning the 40 is above the 20, you should recognize that the market has switched momentum to the downside. This is on a 15-minute basis. So on a 15-minute basis, momentum is pointing to the downside. On an hourly basis, momentum is pointing to the downside because you can see the bear cross happened right there. Price is unable to stay above the 20 and 40 EMAs. Price is trending to the downside, right? Until you see a shift like this, where you start seeing a bull cross like that on momentum, it's hard to imagine, that we're just going to spontaneously push up. It's possible, but it's better to assume right now that the momentum is pointing to the downside. And also because we're below those key levels, that I mentioned earlier, right? So that's on an hourly basis. Okay, well, what if we dig into 4-hour? Well, 4-hour, it's getting a little bit murky now. 4-hour, the 20 and 40 EMAs are also tightening here. So in this particular area, technically anything can happen, okay? Maybe price, once again, reclaims this SR level, this diagonal support line. And maybe the 20 and 40 EMAs do not bearishly cross. Maybe this thing spontaneously turns like this, and this thing widens and turns like that, and price sits above both these, in which case I would then be targeting 17,500 all the way up to $18,000 for a long position. Okay, until then, again, I think this area is a little bit murky to start trading in and out of. On a daily basis, what do we have? 20 and 40 EMAs clearly pointing to the downside, right? Both of which are telling you quite clearly, hey, things are not looking good. We've had a bear cross on momentum, right? So all in all, levels are telling you that things are not looking good. Momentum from the 20 and 40 EMAs telling you levels are not looking good. And then on a weekly basis, like I mentioned earlier, right, we broke through a pretty structural sort of key level right here. And until that is reclaimed, your upside should be capped. Your upside should be seen as a quick day trading intraday scalp basis. That's it. Okay. Until this level is reclaimed, then you can start talking about swing longs to the upside or something. Okay. All right. And also, let's just say we come back towards this level and we start rolling over. Well, then you can start saying, okay, well, now I want to start getting short right here and have my stop up here and take this trade to the downside. That is a little bit more reasonable, for shorting opportunities. Until then, if you're trying to short in this particular area with like a swing short, it might be a little bit rough for you because the market just could just be incredibly choppy. It might just chop you to death. Okay. Other assets that I'm very keen on and particularly trading, I think Ethereum is still a pretty good asset that gives you good SR levels, good opportunities. But again, Ethereum, same thing, right? Ethereum right now is sitting right at this like sort of ascending structural level. However, it's also below weekly view up, daily view up, monthly view up, daily open, weekly open, monthly open, right? So it's below all the key levels. So betting on upside right now might be a little bit tough. Unless you just want to get long, because you think that from here, prices are not going to break down too much. Say you place a stop like 3% deep. And you think that, well, I think that Ethereum is going to go to like 1,400 or something, right? Well, then in that case, okay, this is a pretty solid trade. But if you're just betting on upside back to say 1,270 or 1,300, then you're risking 3% for another 3% upside. That's not really the best, risk reward trade. Other assets I'm paying attention to, Atom, right? Also, I still think, Atom is going to be one of the better structurally traded assets, whether it's to the upside or the downside. I don't really have a dog in the fight for the most part. I have a small, long position on Atom. I have a small long position on Matic, but for the most part, these assets, I'm not calling bottoms on them because I'm just not sure. I'm not willing to, put my neck out on the line for these assets because, as of right now, they're clearly showing you that something is particularly very, very wrong here. Momentum is either really shifting towards the upside and more of a squeeze to the upside, or we're already ready, for our, downtrend to continue. Okay, so again, it creates a very messy situation to get in and out of the market. From the total market cap perspective, right, I already told y'all before, a very simple way to look at the market is, in the coming weeks, right, if we just stay range bound right here between this KSR support level and this resistance point, we can just chop and chop and chop. And this could be a very fantastic trading range for many alts or maybe even BTC, depending on, which asset you're trading. And this, rangy movement could be your bread and butter for the next few months. Forget bull markets, forget, further continuation of bear markets, just think a large range to trade. Okay. All right. Let me see here. We already talked about the S&P 500, right? So one thing that we want to be watching is, on the S&P 500, we already hit the 200-day moving average. We already hit the descending trend line resistance point. From here, you probably want to start being cautious here because this could be building out kind of a messy head and shoulders or something. So you want to be watching out for stuff like that. Over the past, if you look at, most downtrends that have begun over the last few weeks, or rather the last few months, that kind of looks like a head and shoulders to me. This is like a double top. This is a head and shoulders looking pattern like that, right? Again, multiple days spent at the top and then sells off. This to me is also a head and shoulders like this. So all these, right? If you look at going back to right here, December 2021, there have been multiple days, maybe even a couple of weeks where the top was actually created and then the market sold off, right? And then the market sold off, market sold off, market sold off. Same thing right here, which I believe, personally, I believe a local top is being somewhat put in right here. I don't know how it's going to look. I'm not, 100% confident that it's going to be a head and shoulders top and that we have to break down. But so far, toppy patterns like that have been pretty spot on over the last, 12 months or so. So I would be looking out for that on the S&P 500 as potential top patterns. And that could, again, negatively translate into BTC. Okay. All right. Are there any questions? Okay, a couple of things I do want to mention, by the way. Here's some interesting data points on Solana. Again, I've been talking about Solana, which I believe is still 50-50 on my list of why it could go down another 50%, or why, even if it goes down another 50%, like the upside could be that there may be, I don't know, like almost like a 200% upside from there, right? Like here's kind of how I mapped it out. Okay, so let me turn off my levels here. And here's what I did. I simply said, okay, very simple comparison of this, and let's split the chart and compare ETH. Okay, so if you look at ETH back here in 2018 and 19, right? I remember, I don't know if y'all were around in 2016 all the way to 2019, but I was. And I remember, buying ETH way back early 2000, late 2016, early 2017, and I kind of just bought a little bit on the way up. I remember this trading range where it felt like from June all the way up until October, November, I was like, okay, well maybe this asset has already topped, and I don't know it yet, but I didn't sell. And I also didn't even sell at top, by the way. I sold like somewhere around $800 or $900. But the point is that when we had this range right here back in 2017, it felt like forever. But that was the defining range of where a lot of participants, bought for this next big leg up, which is almost a 2x or 3x. And then the market went into a big bear market and retraced, almost, I think 95%, if I'm not mistaken. I think it retraced 95% from the highs, right? So you can see right there, 94.62. Guess what? Solana, similarly, okay, had that range. From the highs, Solana was also down about 95% or so, right? Maybe a little bit deeper, but 95% approximately. So the point is that what I see right here and what I saw back here in 2018 and 19, it looks very similar. And if we're building a range right here for ETH, in the same way that we're building, the range out here for Solana, well, the upside could be like, ETH went from recapturing this range low up until this point about 180-ish% gain. So if that's the case, well, you know, 160, 170% gain back towards $48, $50, you know, 165% move right there, right? For Solana. That's a pretty damn good move. And again, I don't know what Solana's future holds. I don't know if it's going to be successful. I don't know if it's going to die. I don't know if it's going to be anything similar to Ethereum. I'm just saying from the price perspective, and if you don't think Solana is going to die, say in the next few months, just pay attention to something like this, because it might happen. And you might kick yourself for not sort of buying the reclaim of this level right here. By the way, you know, the question is like, well, you know, could we go down another 20, 30% before it does something like this? Yeah, absolutely. So you want to manage your risk for this downside again. Okay. So I'm not, you know, particularly saying that you need to be a buyer here. I'm just telling you something to look at. It's not investment advice. You know, I already have a position in Solana, so I'm not going to tell you to buy or sell. I don't care if you do, but I'm letting you know things are very uniquely interesting in terms of, you know, Ethereum comparison from 2018 and 19 to Solana comparison in 2022 and 2023. All right, so I'm just going to leave you with that. And I think, you know, some good stuff on my Twitter feed. Obviously, oil, you know, not balancing despite the China news. This is kind of interesting. Rates are lower, even with the market sell-off. Also kind of interesting. Let me see here. Anything else? Oh yeah, by the way, make sure you guys pay attention to this podcast. Again, like I said, right, bear markets, if you are part of the bear market right now, and you know, if you're not spending a lot of time in our community, looking at my analysis, looking at my research that I put out, looking at things that I share, you need to make sure that you're consuming enough information in the crypto bear markets, or you're, you know, paying attention to enough things in crypto, because this is where the winners of the next cycle are made. Okay, the winners of the next bull market are made in the depths of the bear market of today. So make sure you still do your research. We still have the lifetime membership that I told y'all. It's a one-time payment, you know, for $1,750. One time, where is it? Okay, $1,750 gives you a lifetime payment, lifetime access to our membership for everything. Okay, so if you're interested, you know, join the community, come hang out with us, read the research, you know, ask questions, get involved, and trust me, this will be one of the best things that you'll ever do, ever, because there's a ton of really, really smart people, and I put out a ton of, you know, market updates, analysis, all kinds of information for Advantage members, for the paid members of our community. So if you are interested, $17.50 flat, you get access for life. Okay, if you're interested, hit me up or leave me a message on Twitter or leave me a comment on YouTube. Okay, or join our Discord. It's free for the free channels. All the lock channels is where the real alpha is there. Okay. Cheers. Good luck, everybody. Good luck in the bear market. Hope you all do well.